In today's video, I'll be discussing capital gains tax, or CGT for short, which is a tax on the profit or gain that you make when you sell or gift an asset that's increased in value. For instance, if you bought some shares for £10,000 and sold them for £15,000, your capital gain or profit is £5,000, which is the amount assessed for CGT. Almost any personal possession can be subject to CGT, from shares and investments to buy-to-let properties, second homes, jewellery and antiques. Some items are exempt from CGT, including shares or investments held within a pension or an ISA, your primary home, your car, and assets that you give to charity. Until the end of the 2022-23 tax year, the first £12,300 you gain is tax-free, which is sometimes called your annual exempt amount. Next tax year, however, this allowance will drop to £6,000 and then down to £3,000 in 2024-25 tax year. How much CGT you will have to pay will depend on your income and your marginal tax rate. If you pay the basic rate of tax and the gains you've made are still within the basic rate band, you'll pay 10% capital gains tax. However, if you're selling residential property, the rate rises to 18%. If you are a higher rate taxpayer, or your gains combined with your income bring you into the higher rate, you'll pay 20% for most assets and 28% on gains made by the sale of residential property. When you sell assets and have made gains of more than £12,300, you must declare it to HMRC. How and when you do this depends on the asset or assets you've sold. If you've made a gain selling or giving away other assets, you can report and pay the tax straight away using the real-time service on the government website. Or you can report it in a self-assessment tax return in the tax year after you sold the assets. If you sell a property and it completed after the 27th of October 2021, you have just 60 days to report your gain and pay the tax due. To do this, you'll need to set up a capital gains tax on property account on the government website. You've got a number of options if you want to reduce the amount of CGT that you pay. It will, however, be highly dependent on your personal circumstances, and you may need to manage the reduction over time. You can gift assets to your spouse or partner, increase your pension contributions, and make full use of your annual allowance. That's all I have for today's video on capital gains tax. I hope this has been helpful and informative. Thank you for watching.